you have an amazing idea and you need to get it funded. And so here are some thoughts on how to raise business capital. First is you should understand what sources are available to you. So there is the bank, and you probably will go there first because there are banks everywhere in Jamaica, and you will get feedback very quickly as to whether or not you will be able to raise capital. There are also high net worth individuals, but again, not all of us know really rich people that would give us money, but it is a source, and it's really clear to understand your universe of sources. There are also venture capital funds. Some are one-person shops where they've raised money from a series of families or friends, and so these are options. And then finally, there are private equity funds such as mine, and there are others in the region, some based in the region, some based outside of the region that do business in the region. The way you understand the sources, so you might ask the question, how will I know what sources are out there? Go to conferences, that will come up. You ask people how do they get their businesses funded. You might also talk to advisors. So people in the industry like accountants, lawyers, they tend to know where capital sources are and who capital providers could be. And so you would network within the industry to find out the sources. The second thing to do in terms of raising business capital, which we don't always see, is you should have a business plan. A lot of people say, I need to hire a consultant to write my business plan. And I always say to them, that's the first red flag. Because if you have an idea that you're very passionate about, or you may have a business that's already running and you need to raise capital, you need to write a business plan to be clear about how the capital would be used and why people should give their money to you. So a business plan helps you to crystallize exactly what it is you're doing and why this capital will help you to be successful. The third thing is actually to understand the process that the person, the capital provider, is going through, so you can figure out how to be successful in that process and to position yourself as best as possible. So it's important to understand what are they looking for. So what are they looking for? The first thing, apart from the business plan, is they want to see that you have skin in the game. So what exactly, what sweat equity or dollars or other do you bring to the table? What have you already invested in your business? The second thing we're looking for is who is your management team? Do I believe in the people's ability to pull off this business plan? Do I think that, what sort of track record do they have? And track record, you know, it can be a resume, but it can also be creative. You could say you convinced X number of people to buy your product before you even had a business plan. But think about creative ways to explain what your track record has been. Thirdly, they want to understand the demand for the product. So people will come in and say, we have a vision, we have an idea, but we need to understand why will people buy your product? Is this something where the market is growing and so you'll grow with the market? Or is it something where you're stealing share from people in the market? And is it many players in the market or few players? A lot of people just say, I'm going to come in with a lot of passion, and I'm going to come in with a lot of charm, and I'm just going to convince you that we will get sales if you give me money. And that is not enough. So really understanding the demand and bringing a fat base to the table is very helpful. The fourth thing is around valuation. This is where entrepreneurs and businesses always get tripped up. No matter how sophisticated the business is, no matter how many years you've been in business, everyone always believes their business is worth more than it actually is. So what's really important is to go out there and get a professional opinion about what your business is worth. For valuation, if you don't want to spend any money, the best way to go is probably a discounted cash flow analysis. And you can also use comps, trading comps, or you can just apply what we call the Caribbean regional multiple of 5 times EBITDA. So in general, it's very important to understand what your valuation is, which will then help you figure out how much of your company are you going to give up. So that leads to what type of security are you going to ask for from the potential capital providers. Do you want convertible debt, which means they're going to give you a loan, so you keep all the equity in your company. If you do well, they have the option, they being the capital providers, to convert to equity. If you don't do well, they will call the collateral because it's a loan, so both sides win and you don't have to give up any of your company. Or are you going to do shares, equity, and therefore you have to figure out how much you want to give up. And that's going to be based on the valuation. So if your company is worth $1 million and you need 500,000 of equity, that's 50% already. So do you really want to give that up? So there are creative ways to figure out how much, but the valuation and how much you're going to give up is going to be very important. And finally, you have to be able to portray the return. So what's in it for the capital provider, understanding what their trajectory or their timeline is. Essentially, capital providers want to eventually get out of the business. They're here to fund your transformative growth strategy, and then within 5 to 10 years, they exit. They feel good because they have giving you capital to take a step change in your business. They've made a lot of money. They get out. You continue to grow your business on your terms. But it's very important to be able to characterize that return profile for them and how they think about how they plan to exit your investment. And then the final thought overall is, as you're looking to raise business capital, please engage advisors. You can talk to lawyers. You will need a lawyer, but you don't have to start paying them immediately. Just have initial conversations with a lawyer. Depending on how sophisticated your business is and how much capital you need, you probably need an accountant. And when all is lost, especially if you're an SME, you can always come to Katalyst, because that's what we're here for.